What if you could legally shift part of your pension income to your spouse and pay thousands less in taxes every year without moving a single dollar out of your bank account? Most Canadian couples in retirement have never heard of this strategy, or they assume it doesn't apply to them. But if you and your spouse have different income levels, pension income splitting could be one of the most valuable tools available to you right now. Today, I'll walk you through exactly how it works, what qualifies, what doesn't, and how to apply it. Here's the core idea. Canada's tax system is progressive. The more you earn, the higher your tax rate. So if one spouse has a high pension income, and the other has a low income, the household pays more tax than it needs to. Pension income splitting lets the higher-earning spouse transfer up to 50% of their eligible pension income to the lower-earning spouse on paper on the tax return only. No money actually changes hands. But by reporting income this way, both spouses move into lower tax brackets, and the combined tax bill drops significantly. So what income qualifies? Life annuity payments from a registered pension plan qualify at any age. If you are 65 or older, RRIF payments and RRSP annuity payments also qualify. However, there are important exclusions. OS payments do not qualify. CPP and QPP do not qualify under this rule. CPP has its own separate sharing program through Service Canada. US IRA income and foreign pension income that is tax-free in Canada under a tax treaty also do not qualify. Understanding these limits is essential, so you don't make an error on your return. Here's a bonus most people miss. When you split pension income, both you and your spouse may each claim the pension income tax credit up to $2,000 per person. Instead of only one spouse claiming it, both of you can potentially benefit. This alone adds hundreds of dollars in savings on top of the tax bracket reduction. How do you apply? Both spouses must complete and sign CRA Form T1032, joint election to split pension income, and file it with your tax returns by the deadline. You choose any percentage from 0 to 50%, and you can choose a different amount every single year. You are never locked in. If you change your mind after filing, CRA may allow an amendment or revocation within 3 calendar years of the original filing deadline, as long as both spouses agree. One more key benefit by lowering the higher earning spouse's net income, pension. Pension splitting can reduce or eliminate the OS clawback, which starts when individual income exceeds $93,454 based on 2025 income. It also protects the age amount credit for couples near the clawback threshold. This strategy can preserve thousands of dollars in OS every year. For questions, contact the CRA at 1-800-959-8281. See you in the next video.